Good afternoon, everyone. Thank you for joining. Special thanks to the Interledger team and leadership for another amazing summit. And I'd also like to recognize the members of the parliamentary group that's joining us. I'm Ngare. I'm head of innovation at Snake Nation. We're a content technology and culture company. We're located in Cape Town and Atlanta, Georgia. We explore different ways to help diverse creators build their audience, distribute creative product, and create value for their work in the creative ecosystem by connecting them with opportunities, training, and innovating specifically for creator payments. So what brought us to the Interledger Foundation is our mutual commitment to evolving financial inclusion by advancing the capacity for open payments. In theory, we can unlock economic potential in the creative economy, specifically for the Global South. Today, we will be discussing how to build trust and advance open payments. But before I begin, I'd like for my panel to introduce themselves. I'll start with you, Tawanda.
All right, thank you, Dre. Hello, everyone. My name is Tawanda Brandon. I am the CTO at Snake Nation. I work very closely with Dre, and we've been part of the Interledger/web monetization community since 2020. I am largely responsible for all of the tech integrations, basically our tech platforms. Essentially, our platform, which, as Dre alluded to, allows creatives to post their content and provides a channel for distribution to traditional media and big brands out there like Netflix. And we've been part of the Interledger mostly because we did discover how much payments are very fragmented in Africa. And with the creator economy being global in its nature, there is a need for cross-border payments that are efficient and secure. I'll leave here and pass the mic to Jurgen.
Hi everyone, my name is Jurgen. I'm the founder and CEO of Zago. We're effectively a stablecoin exchange. We are registered in Cape Town, South Africa, and are a registered CASP. Also got an Australian entity called Zago Australia and are registering in Nigeria. So basically, we are a crypto on and off ramp. So what we do is, for example, we issue rands onto the XRP ledger and currencies for US dollars, euros, and use that as a stablecoin exchange in order to do on and off ramps. And we can settle in multiple African currencies. And that is our goal, to build entire ecosystem through Africa in order to build on and off ramps right through Africa.
All right, thank you. Good afternoon, everyone. My name is Keith Sabilika. I'm a senior specialist at the FSCA, so that's the Financial Sector Conduct Authority. I think many of you may know that FSCA is the conduct regulator in South Africa. And I'm coming from the FinTech department, where I'm mostly responsible for monitoring FinTech trends, conducting research and trying to understand how they impact the ecosystem and the regulation that's currently existing and what can be done from that perspective. Thank you.
Thank you, guys. So, Tawanda, we're going to start with you. Tell us about your experience in exploring the Interledger technologies. What were you attempting to achieve, and what were your conversations that you had about integrating open source technologies into your tech stack?
Okay, so the first intersection with the Interledger was, of course, payments. For our platform to at least serve our people the way that we intended to, we need to be able to allow people to make cross-border, we look at it from a low value, high volume perspective. So instead of thinking of someone sending $150 or $1,000 at a time, on our platform, the nature is quite the opposite. It's since every engagement on content generates some form of value, every like, comment, view, share, etc., is a fraction of a cent. And we obviously could not do that with traditional banking rails, starting with the 2 decimal problems. And there we realized that some of the value that our creatives were accumulating over a period of time was so minute, you wouldn't actually be able to send that over, even mobile money if you wanted to. So the first touch point was, of course, web monetization and the ability to stream payments. We wanted to apply that on audio on demand, video on demand, viewing for audio content and film content on our platform. And we also wanted to apply that for, live streaming, as well as the tips, likes that are, micropayments in their nature. And I would say, learning with what we've learned now, the building part or the integration part of the tech was the easy thing. I think we started with web monetization. We managed to do that integration. Well, at least at the level that we were able to satisfy our grant. And of course, we ran into the one big hurdle that a lot of the other grantees have run into, which is you're building with your team, you build your tech, you build your pilot, whatever, your MVP, and then there is this big monster code regulation that you kind of, for the first time, you have to deal with. And I think that is, of course, is really affected what we've been able to integrate at this point, and our roadmap specifically as it pertains to the delivery of payments to the different countries where creatives are coming from. And I would say that for transitioning from the web monetization grant and going into the financial services grant, the integration with Rafiki also was, pretty straightforward. It took a little bit of time, when before the alpha release that we first saw maybe two years back. The going beyond integrating Rafiki, which we did at the hackathon at the summit last week, it was very quick, very easy. But getting to that point where we look at the banking partners that we're talking to, we look at some of the financial institutions that we're talking to, we were in some cases either ahead of what they understood from what regulation would permit them, or in other cases they were just outright not looking at crypto at all because it was just too risky. So we're now in a situation where we've completely separated the development of the tool, the tech platform and how this is going to serve the users, and then the payments layer of it, specifically as it relates to regulation. We've tried to apply. We've been applying for a VASP license in Mauritius, and we are now going to be applying for a CASP license here in South Africa. But the approach now is more in parallel. So instead of pursuing a license first and then building the tech, or building the tech and then pursuing the license, after, we just decided to do that in parallel now. So leveraging off of existing companies and existing registered financial services providers for payouts and off-ramps, and then at the same time building the best version of this payment rail that we are envisioning at a level where we just need to keep tweaking it, making it more sustainable, more efficient, but essentially starting off from, okay, so if you're a creator here in South Africa and you want to subscribe to a channel, someone in Ghana, for $2, are we going to be able to allow you to do that in real time with minimal fees? That's kind of like what we are going to be working on right now, and then just use that to build a case for our regulatory and licensing requirements.
Thank you, Tawanda. I'm going to jump over to Keith because you're the coolest regulator I've seen in a while. So, Keith, can you tell us a little bit more about break down what regulation looks like in South Africa, how African regulators are looking to foster an ecosystem that encourages innovation while ensuring compliance? How do you work with other fintechs and banks? You know, let's start there. That's like 5 questions in one.
All right, no, thank you. That's a mouthful. I'll need the whole day, but I'll try to answer that in a few minutes. So, I think the way that regulation is looking like in Africa in general, I think, especially when you look at payments and all other, fintech segments, it's still fragmented. I think we all agree that there's still work that needs to be done in order to harmonize that regulation. But when you come home here in South Africa, what you can see is that regulators noticed the trends that were coming off fintechs in terms of driving the financial services sector. And then back in 2016, they decided to form a working group that's called the Intergovernmental FinTech Working Group. And within that working group, that's where they've got an innovation hub, which is made up of 3 facilitators. So we've got a regulatory guidance unit, which is essentially a one-stop shop for startups and incumbents to engage, to ask questions when it comes to any regulatory questions that they have before they even fully develop their solutions. And then they've got a sandbox which allows these fintechs to test their solutions that are challenging any existing regulation or where there is no regulation that's currently existing. I think it's important for me to highlight the regulators that are involved in that innovation hub. So we're talking of the Reserve Bank, FSCA, National Credit Regulator, FIC, Competition Commission. We've got National Treasury coming in as a policy maker within that. So it's a collaboration of all these regulators that have come together to assist this space to make sure that they don't stifle innovation, but they understand the risks and the opportunities, and then they engage these fintechs from early stage, guiding them with regulatory guidance, and then they can also have time to understand what's happening in the sector so that they can start working on regulation that's protecting consumers and this balancing also the innovation that's taking place within the sector. So these are like some of the initiatives that the regulators are doing. And also within that working group, we've got an innovation accelerator where all these regulators are also conducting research on various topics that that are emanating from the ecosystem, like your open finance, crypto assets, AI, in a way of trying to understand all that so that they can formulate regulation that's supporting the innovations and also aiming to protect consumers operating within the space. So in a nutshell, I can say that's what South African regulators are sort of like doing in order to assist and supporting the innovations and the work that's taking place within the ecosystem. I think I'll pause there. Thank you.
Yeah, that's an awesome answer. Now, Jurgen, you went through the sandbox. You were one of the early companies to experience South Africa's regulatory sandbox, and you went through unscathed. It didn't sound painful. Can you tell us a little bit about your experience and any advice you have for companies that are going through the sandbox?
Sure, thank you. So we actually were part of the first cohort of this IFWG sandbox. What really happened was when we engaged with the South African Reserve Bank, when we started up our business, we obviously realized that by issuing stablecoins on the ledger, we are dealing with something a little bit unique. And so we were always very open and engaging with the South African Reserve Bank. So if I can just point it out, the South African Reserve Bank was always very open with us. Every meeting, they were always engaging, they were always very forthcoming with information. It never felt like they were like, oh, what are you guys doing here? So when the sandbox came around, we were sort of invited to apply, which we did, because, we have a unique case. We would like to test cross-border payments using the XRP ledger. and stablecoins. And so we went in with a certain view. We thought this is how it's going to look like. And I would assume the IFWG or the FinServ and FIC and everyone that was involved in that sort of their side of things had their view. And we quickly realized that it's quite far apart. And not far apart because we're way out, but what we thought we were going to be testing and what they thought we were going to be testing were two different things. So, but it was a really open and engaging situation. We ended up getting our contract renewed 3 times, which meant we were testing with them every 2 weeks for a year and a half. And it was a really good learning process. What we were really testing was, which is slightly different maybe for those people who are not in South Africa, we have exchange control. So in South Africa, there are 3 regulators at the moment regulating crypto. So the first is the FIC, which is you become an accountable institution for money laundering and KYC, FIC, all that stuff. You need to make sure that that is all in place. The second is the FSCA, where this is becoming a financial product, the crypto that you are dealing with, and that is how you are conducting your business. And then the third, which is not in place yet, is FinServ or exchange control, which is the South African Reserve Bank when it comes to reporting of these crypto transactions as the funds flow in and out across the border. So what we were really testing is exactly at what point is a crypto transaction a cross-border transaction. For example, is the cross-border transaction the moment when you go into crypto? Is it when it leaves the exchange? Is it when it gets turned into a foreign currency? At what point is that actual report happening? Because that makes a massive difference on how you apply this business. So, for example, if we're a big exchange and people put money in, they can put money in and out, they can go crazy. But if they start sending it off the exchange, what does that look like? Is that a reportable, a non-reportable transaction? And those type of things. So these things affect how these exchanges can deal with that reporting inevitably.
And again, unscathed. But what has participating in the sandbox done for your company? What are some of the benefits that you've received from participating in the sandbox?
Well, for starters, it was knowledge. We didn't understand exchange control nearly as well as we thought we did. So having that close relationship with FinServ and being able to, I would like to say, not really debate, but understand their thinking, and then applying it on a technological level on our system. So we were able to actually test these reports and send them reports and get feedback from what those reports should look like. So we feel quite comfortable with where we are if this particular regulation would come into play. But we also, as a business, getting into the sandbox got a bit of credibility. And that actually helped us with our fundraising, and we actually did get quite a good funder because of it. I was very excited about the fact that we are working so closely with the regulators.
Yeah, and I think that's a big point. As a FinTech, as a company working and designing ways to evolve and innovate around payments, the ability to work with your local regulator is super important. But one of the things that I've also noticed is that you just can't, getting the response from your regulator is cool, but sandboxes are really meant for testing the unknown. Keith, could you explain a little bit about what would make a good sandbox experiment, or what you're looking for when accepting people into the sandbox?
No, thanks. That's a great question. I think some of the things that we consider when we get these sandbox applications, we look at issues around financial inclusion. Will this solution actually alleviate financial inclusion? Is it going to benefit South Africans, right? We're looking for solutions that are on the cutting edge, that are different from what we already know that's existing in the sector. Obviously, because it's a regulatory sandbox, we're looking for solutions that are challenging existing regulation or that are not covered within regulation so that we can test the innovation against regulation. And then we also consider, because we don't provide funding or any advice when it comes to the development of the innovation, we're looking for solutions that are fully developed so that we can just test them from a regulatory perspective. And then part of the testing process is that we give the FinTech an exemption to operate within a controlled environment where we agree on the number of consumers, the type, the exposure that they are supposed to have, and then they report to us, and based on the outcome of that, then we can then either decide to extend the exemption. We can then decide to allow them to maybe stop until we rework on the regulation. But there are a number of options that we can explore, including even adding some amendments to existing regulation to accommodate that. And I think the great thing about it is that when these outcomes come out, in most instances, they don't just affect that one institution, then they are then rolled out to the entire sector for everyone to sort of like benefit from the insights that are gathered from that testing. So these are like some of the things that we sort of like consider when these applications come through and then they go in for testing. And I think the last important item is that because it's a multi-regulator sandbox, we also consider the appetite from the various regulators. If there's a certain area that they are interested in, that they want to understand and work on and then improve regulation, then when applications of that nature come in, then they sort of like look at them, consider those use cases and try to put them through the sandbox. So it's also appetite dependent from the regulators, because sometimes we get like good applications, but you find that the regulators are not prioritizing that aspect because of certain issues. Then they might not say, let's not work on it for now, but certain areas they are looking into them because of what's emanating from the sector, and they really want to understand and improve regulation along those lines. So those are like the kind of things that we sort of like consider on a high level when we receive these applications. Thank you.
Thank you. So I did a little research. There's 12 African countries that have regulatory sandboxes. These programs are aimed at fostering financial innovation, inclusion in the FinTech sector. Jurgen, you've had a little bit more experience working with sandboxes outside of South Africa. Can you speak to any of your experiences, or if you're allowed?
So we actually haven't had any experience with the sandbox out of South Africa, although we are talking currently to the Namibian regulators. So they actually invited us to enter into a sandbox with them because their regulation is very much the same as ours with exchange control. However, we didn't feel it necessary to test anything there because it would be the same outcome for us. So we weren't motivated to particularly enter into a sandbox there. But we also have entered into a Nigerian sandbox with the SEC. So we are currently looking to get that approval so that we can do some testing there.
That's awesome. I want to switch over to licensing a bit. As Tawanda was saying, Snake Nation is looking at getting a CAS of Aspen, Mauritius. Could you tell us a bit about the licensing process? And I'll open the floor up to whoever can speak best to that.
All right, so let me, I guess you're referring to the crypto asset licensing. So maybe let me start there, then Jurgen, you can then just add from that. I think from the time the Intergovernmental FinTech Working Group was formed, there was another working group that was formed, which was outside the IFWG, which is called the Crypto Assets Regulatory Working Group, which has done a lot of work on crypto assets. And that work led into a final position paper on crypto assets. And there were about 25 recommendations that came out of there. And one of the recommendations was that FSCA would be the leading regulator when it comes to crypto assets. And concurrently, when that work was being done, FSCA then declared crypto assets as a financial product, and then invited crypto asset service providers to start applying for licenses so that they can receive the license, they start to be regulated and supervised. And all that happened between, I think, 2014, that's when 2018, that's when the Crypto Assets Working Group started. But fast forward to today, FSCA has been receiving applications from crypto asset service providers since June last year, and we have received over 300 applications, of which about 130 of them have been awarded with the crypto assets licensing. The declaration, what it actually means, or the license, what it means, it's a license to crypto asset service providers that are involved in intermediary services with crypto assets and providing advice. There are some areas that fall outside FSCA that still need to be addressed. Issues around using crypto assets for domestic payments, crypto assets for cross-border payments, stablecoin issuers. There are some areas that fall outside FSCA's mandate, but respective regulators that are involved in that, they are also furthering work when it comes to those aspects so that they can also fall under their regulatory ambit. I think that's what I can say for now when it comes to the licensing of crypto assets. Yeah, I'll pause here. Thank you.
Thank you. So I want to switch over to open banking. How do you envision the adoption of open payment standards changing the competitive landscape? I understand that open banking institutions are making available their data. They're opening up their APIs for FinTechs to take advantage of the data, allowing for third-party transactions. How do you see the future of that laying out? I'll open it up to whoever has the best answer.
Okay, or no, I'll take a stab at it. So it's very interesting what we've been seeing happening here. We had a talk earlier, and we're exposed to some of the work that Nedbank is doing. For example, they've opened up a lot of their APIs, and there's a trend between opening up your APIs to with third-party, fintech companies in mind, kind of thinking, oh, look at Snake Nation, for example, what we've been trying to do with certain integrations with some of the banks we've been trying to talk to. If their APIs were open, there's certain integrations that we wouldn't have needed to be worrying about. A very good example being like KYC, for example. You already are registered with this particular bank, you have an account, they've already done your KYC, and you're going to register with Snake Nation. Let's figure out a way to leverage off of that data that the bank already has. But we've been seeing that a lot of these APIs that they're opening up are more or less on the side of the bank than of the fintech, rather, to enrich their service delivery or improve their products one way or another. But at minimum, they are providing, APIs that will, at the very least, allow you to do some kind of transactions, pull out some historical data, etc. Now, where does this tie into with like the future of where payments is just going in Africa in general? There is a big trend of just social banking that we've been seeing all around the globe. And one of the best use cases of this has been the integration of like payments into WhatsApp. And the companies that are leading a lot of these innovations that bring any kind of payments into a social space solely for the reason of accessibility, right? The stuff we've spoken about with WhatsApp being available to almost everyone. So instead of building your own app, leverage off of what's already living on top of WhatsApp, and then just do integrations into your platform. I think for the growth of social banking and all of these APIs we're seeing coming in, just interfacing with users where they're most accessible, whether mobile money or WhatsApp or your Snapscans of the world, but where they're integrating this into social payment, into social applications that already have a lot of users on them, that is going to benefit a lot from banks opening up a lot of their APIs, because in most cases where you're seeing a lot of fintech developers running to open source / blockchain technologies, which in as far as building an MVP or proof of concept is concerned, work very perfect. But then, down the line, you still come to this licensing / regulation conversation. So, the mix between the two, where social banking is going and the banks opening up the API is going to create a favorable ecosystem that I think, especially here in Africa, is going to see a whole lot more adoption and at least success in fintech startups that are currently held up by regulation.
Cool. Did you want to add to that?
Yeah, sure. I can add a little bit to that. So in Europe, open banking is a little bit more prevalent. And so we've got a couple of sort of neobank solutions that we use that are running on those open banking systems. And really what is happening is if you have a sort of a larger bank with their banking licenses, they get a bit risky for crypto, for example. What they would then do is give a sort of a ring-fenced solution. And so basically all their risk is contained into that open banking APIs. And so from what we've seen is that really just adds to friction and adds to costs. And if we are in Africa and we are trying to actually lower the costs and lower the friction, I'm not always sure if open banking is the answer. I do think it is a good user experience or better user experience in getting you to areas where the bank might not necessarily get to. But you must remember that it's a layer on top of an existing banking rail.
Okay. So I have time for one more question, and then I'll open it up to the audience.
If I may just add to that conversation on open banking / open finance, I think also from a regulatory perspective, I think, as FSCA, we've also been doing some work with regards to open finance, noting that, there is an issue with regards to sharing of data, and there are other mechanisms that were being used to access that data, like your screen scraping, which also had some risks to them. And I think if you can also try and follow that work that we have done, it's still work in progress, trying to come up with a policy position on open finance. And also the Intergovernmental FinTech Working Group is also working on open finance, that sharing of data, because there are some fundamental questions that get asked when it comes to the sharing of data, especially by banks, because when you ask questions like, whose data is it? Is it the bank's data? Is it the consumer's data? So open finance, open banking, gives that option to share data with consent. And then when it comes to APIs, sort of like trying to come up with standard rules when developing those APIs. So there is work that's being done, not yet finalized from the regulatory perspective, but also trying to open up that space, because we understand that if there is a certain position that's taken from there, it would contribute to issues around financial inclusion and make this ecosystem more efficient. So yeah, thank you. That's what I wanted to add on that.
Great answer. South Africa's in an interesting position. Heavily banked, but people use their bank account as post boxes. So you'll see, what was it yesterday? It was payday. There was a long line at the ATM, and it got me thinking, if the world is moving towards a more digital requirement for either income or even, work is moving into the digital era, when you see people using cash or their bank account as a post box, and there's no data, they're not taking advantage of what the banks can offer or what the fintechs can offer. You know, what do you see as the challenges of crossing that digital divide? I'll open it up, and then we'll open it up to the crowd.
Sure. So really, it comes down to the same thing. A bank has got a certain license to do certain things, and they might have, many prerogatives that they are following. The whole purpose of this open banking and open APIs is to actually give different experiences which the bank might not necessarily do. This is a neobanking experiences. So that's exactly a good example, what you're referring to there.
Yeah, actually, I love that. I think it just speaks to my previous point on social banking and the use of WhatsApp chatbots, for example. So accessibility is a big thing. Some people, for some people, they may be looking at it from a perspective of, I'm using a feature phone, and I don't have, and data is expensive here in Africa, stuff that we already know. So I'm definitely not going to be, interacting with my bank account on my app like that. And for me, interacting with my bank involves me walking or, taking a taxi to an actual physical branch and, interacting with them. And I think a lot of people are in avoiding that whole, whether it's the physical or is the digital around, my phone is not smart enough to be able to do this, or I don't have the connectivity to be able to do this, just leads to, users trying to find a little bit more convenient way to just still access the services which we know they need, right? They definitely need the financial services, and not accessing them through the platforms that the banks are providing is not an indicator that these are not services that are needed. I think the opening up of APIs, etc., provides different user experiences that cater to different, groups of people in the market. So, like what mobile money is done with USSD is like you can still have a bank, you can still transact, receive your money, and you can still go and pay without actually touching cash, but at the same time without opening a mobile app. And that's something that, everyone who has access to, a phone service is access to a bank, and which isn't necessarily the case that everyone who's, using the internet or is on the internet has the same level of accessibility to financial services.
Thank you. Okay, I'll open it up to the crowd for any questions. I see 3 questions, 3 hands up.
Hi, can you hear me? Cool.
Yes.
So in terms of open banking, one of the key use cases we've identified, particularly in bringing solutions to the lower income segments in South Africa, we're introducing a custodial wallet solution, right? And we've identified that through an open banking API, we can actually almost, instead of implementing our own KYC processes, we can actually obtain that KYC data from, existing banking institutions. I just want to understand, what's the regulatory stance on this in terms of utilizing KYC data through an open API, and how powerful do you see this going forward? Do you think maybe there's an evolution towards almost central KYC housing, where banks would act as a KYC service provider in a sense? Thank you.
It's a great question.
All right, thank you. I think you're raising an important point. I think hence I've said that there is work that's being done on open finance, because considering that South Africa hasn't adopted a policy on open finance and use of APIs. Is it mandatory? Is it not? So currently, I think the relationships that are forming, they are forming from bilateral relationships between fintechs and banks. But obviously, there are benefits that you have highlighted from using those open APIs to access that data. But from a regulatory standpoint, currently, nothing has been pronounced when it comes to that until we have gotten to a point where we have adopted an open finance, open banking policy that has got certain requirements around licensing, sharing of data, standards around APIs. Then at that point, we can then say this is what's required and this is what regulation says around open APIs. I hope I've answered you. Thank you.
Thank you.
All right.
Okay, I got a quick question. So, on this side. So my question is, I'm a developer, right? So I wanted to know, from being a developer, I was working on a solution which might some sort kind of be like disruptive, right? Like, let's think about Thomas Edison. If he had to tell people that I'm trying to invent something that will emulate light and stuff, they would say he's crazy. So I want to know, like, is IFWG open to disruptive technology? And what is the regulatory ecosystem doing to keep up with disruptive innovation? Like AI, I'm sure there's no regulatory ecosystem for AI yet in SA. So I want to know, like, what is the regulatory ecosystem doing to keep up with technology that is very disruptive, or technology that they might not understand? Yeah.
All right, so that's a great question. So South African regulators, I think I can speak for FSCA, they are part of a number of international standard setting bodies where these conversations are held and we try to share information and understand this kind of work and the innovations that are disruptive that are coming from the sector locally and internationally. So there is this sharing of information at that level. And then within FSCA, for example, we have a FinTech department where I'm coming from. And part of my main responsibility is to conduct research on such topics. And currently we are actually running a survey, market survey on AI in South Africa, just to understand the landscape, what's happening with AI, the usage, the risk, and the opportunities. And then we have this Intergovernmental FinTech Working Group, which is a collaboration of all the regulators, where we meet, we share ideas, we know what the Reserve Bank is thinking, FSCA knows what, Reserve Bank knows what FSCA is thinking, National Treasury also sits in there, they help driving the policy position on certain topics. So there is this sharing of information and assessing of risks, and then depending on the topic that's being discussed, the work can then be furthered. Case in point is crypto assets. And for us to get to where we are today, it's as a result of crypto assets being disruptive, the risk, the collaboration of regulators, and then declaration and licensing. So there is all this kind of work that regulators do to understand this space. And depending on the outcome of that, they then either formulate new regulation, though we know it takes forever, but we consider that option, or we amend existing regulations so that we at least cater for those disruptions that are coming up. And I think it's also important to mention that when it comes to the regulation of financial services sector in South Africa, we regulate the activity and not the technology. So we are technology neutral, though we understand that certain technologies bring up risk, but we focus on, if you are providing a lending solution, if it's driven by blockchain or whatever solution, we sort of like focus on that activity, and then you would need to be licensed by the relevant regulator that's involved in that, not mainly focusing on the technology, though we understand the risks that come up with certain technologies. I think that's an important point to just highlight. Thank you.
All right, time is up. Do we have time for one more question? No, okay. Sorry, you can find us in the hall. Well, thank you everyone, and that's our panel.